Let's dive a little deeper into the dueling economic data and whether or not the Fed is winning the fight against inflation. Joining me now, Aswath Damodaran is professor of finance at New York University Stone School of Business, and Stefan Rust is CEO of Truflation, which uses blockchain technology to deliver real-time measures of inflation. Welcome to you both. Stefan, I just want to start with you because when your gauge fell below 3% this week, or maybe it was last week, it garnered a lot of headlines. So explain exactly how this works and what it's telling us.
So basically, we use fresh data. We aggregate some 18 million items that we track daily. And so we just use that and take a modern technology-based approach so that the data that we use is actually fresh in the calculation.
The critics would say your data is high beta. In other words, that when prices are rising, as you know, we look at your data a year ago, when the CPI was 9%, you had 12. Now that the CPI is down to, I don't know, 4.5%, you have 3. I mean, is it basically just overcorrecting on the up and down inflection points?
Well, we don't think so. We obviously think our data is taking a more accurate calculation. We're including 15 million items versus just taking 80,000 items, which the Bureau of Labor and Statistics review and track manually with 477 employees. And so we just believe that we're just slightly more accurate. And based on the stress testing that a lot of Wall Street firms put us through, we actually are some 3, in some cases, up to 6 months ahead of where the Fed is.
One more question, and then I want to bring in Stephen Aswath. But when you look into the roots of this project, it came out of the crypto world, and it has this almost inherent expectation of dollar debasement and inflation. I mean, maybe I'm wrong to kind of read into that. Are you yourself surprised that your reading is posting a sub 3%? I'm not sure that's where you thought this project was headed.
I mean, I never thought this project would get as much traction as we had anticipated. We launched this. When we first started, inflation was transitory. It was never going to happen. And if you look what happened in the last 10 years, we printed more money than we did over the last century. And so that had to include and incur some sort of inflationary impact. And so I felt we needed to have some sort of independent source of truth. And that's what we started to work on and build out. And today we now track more items than I can actually keep track of. We really just put that and let the computers and the algorithms and take course and do the calculations, which, by the way, are fully transparent. Our methodology is documented, has been tested, and the ratios are also tested and transparent and visual, so anybody can see the weighting of the data and the actual subcategories under the 12 categories that feed up into the true CPI, as we call it.
And Steve, I just wanted to make the point that the Fed itself has a version of this. It's called the Cleveland Fed Nowcast, and they try to take basically daily fuel prices along with a few other things and that's telling us that June PCE and CPI could be barely above 3%. So it's actually consistent with what Truflation's data is saying.
Sure, and if he's created a better mousetrap, we're all going to flock to it to catch the mice, that's for sure. I had one very quick question for Stefan, and I know we want to get to Aswath in there, but Stefan, are you capturing services in there?
Sorry, I can't hear that.
Are you capturing services inflation?
Yeah, we count for services as well, yeah.
Okay, because your index looks a lot more like the goods index in the CPI than it does the overall index, which includes services.
Let me bring in Aswath on that note. And your recent slide deck, Aswath, has been absolutely making the rounds on Wall Street because, listen, people are totally always following your valuation calls, and I want to talk about NVIDIA in a moment. But on the inflation point, you're actually quite hawkish right now. So at a moment when the kind of Fed consensus seems to be moving towards a skip or a pause, maybe, you're a little bit more concerned about kind of the inflation GD coming out of the bottle, so to speak. So I just wanted you to kind of explain that a little bit.
No, I think the truth is there's good news coming out about inflation right now, but our history with inflation is it's stubborn. It doesn't go away that easily. And in many ways, the worst thing the Fed can do is step back too soon and then have inflation come back, because the next time around, it's going to be even more painful. But I think that the good news about inflation is out there. The question is, will it persist, or will there be some kind of a bounce back in inflation? We don't know yet. And I don't think the Fed does as well. And I don't like the way the Fed is playing games around this. I mean, I think the Fed should be like children. The less you hear from them, the better off you are.